And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 future, the ES, for Sunday, May 2nd, 2021. Friday's trade did not really provide us with a whole lot of extra information as to what the larger move is going to be doing here in the S&P. What we did see thus far, and just to give a quick review on where we stand, is that we continue to look to place the intermediate third wave completion point somewhere, possibly right here, but the market has not really made it tremendously clear that that's going to finish it without the possibility that we are going to rise up again and move to additional new highs above 4,212, which we have seen last Thursday. And as we have discussed back then, that once it reached that high, the market dropped very quickly. And it pretty much clipped off about $40, which is not a small move for the S&P, and it's not necessarily a large move for the S&P, but still it happened very quickly. But the market regained its composure and went nearly back up to, came within 2 points of that high, and then failed again. So I continue to leave open the potential. But I don't know how high of a probability that I really want to give it at this point, but I still have to leave open the potential that the market is once again going to pick up steam and move higher, in which case this wave 4 may come over to here. And that what we saw was A, B, and then a C wave down, and that's 4. And this is going to end up being wave 1 of this finishing fifth wave up, which will then in turn finish the intermediate. So we're going to be finishing a minor wave up, which will be finishing a intermediate wave 3. And then we will get that larger intermediate wave 4 decline. And if you remember, the conversation has really been that the market did not even get close, other than right there, of coming down and breaking below 4,110.50. And if it's going to be an intermediate fourth wave, and I'll just move my time frame up here and we'll take a look at the hourly chart. If it's going to be an intermediate third wave, you're going to see that where that minimum decline begins, and that's 0.236. And so, because what we're going to be correcting is this intermediate third wave, is 3,906. That would be a minimum move within an intermediate fourth wave. We're not even close to beginning there. We haven't even gotten below 4,100 yet. So that lent me to conclude that this intermediate third wave did not finish here, and that it's still in progress, and we just have to be patient and trade and count properly so that we know when we're going to be expecting this more serious decline. Now, could it have ended here at that high? Yeah, it could have. But if that's the case, I'm expecting this thing to turn on its heels, like no more upside, and just start to come down and start to break below the moving averages, number one, but particularly the 200-day moving average on the hourly chart, and start to break support at 4,164, 158, 136, 118, etc., as it starts to come off and show us that we are now dropping into that intermediate fourth wave, and we would just be in the beginning stages, because don't forget, intermediate 4 is going to consist of a minor A, B, C structure. So that A wave should be pretty strong and coming off of those highs, and that's we're not seeing yet. But should downside start, that's where we're going to be looking. It better start more quickly and breaking below levels. I don't expect it to drop a quick 20 points and then call it a day and start moving up again. It needs to continue. It needs to prove its intent, and that there's something that could jar the market, that, whatever it's going to be, that's what I'm expecting is going to come back in and begin to bring things lower. Without that, I will continue to look for market to at least get back up to 4,094, 4,194, I should say, and then again start to move above this high. Now, once we get above that high, we have a possibility. We should find resistance at 4,225, 4,035. And then I think we had some about the 4,260 level. And ultimately, I feel that this third wave, if the market can get itself going, could reach totally back up towards 4,294 to 4,300. That is where if we get enough oomph in this market, it should not have any problems of getting itself up there. And in all seriousness, though, really what the market would need to do is, if we're going to put the 4 here, then we're going to be able to draw a Fibonacci retracements down to there, and that's going to give us a clearer suggestion of where this 5th wave within this cycle here, the sequence, where that 5th wave is going to end up. And don't forget, wave 5 is related to wave 3. So if I'm moving 3 up to here and 4 up to there, then I'm going to draw from here down to wherever this small 4 ends, and then that's going to measure the 5th. If that's the pattern, if that's the path that the S&P 500 is going to be taking. Until that time, we're going to allow for that, but we're going to continue to trade what's in front of us. And initially for tomorrow, if we continue to get upside, we do have resistance at 4,194, and then again at 4,211, 212. And then it starts to break above there, and then it starts to space out a little bit more. We may see 4,225. That was our next level. And I could run up to 35, 36. And then that in itself could complete the pattern. But if it starts to break and I need to move these over, then I will add that additional Fibonacci level that'll give us a clearer picture of what the expectations or possibilities could be. And downside, if it's truly going to turn and go down from here, then it needs to do it in a very quick fashion. So in other words, acceleration would be expected as a characteristic of the wave that it's dropping into. And it would start to break these support levels more cleanly. Right now, 4,164, that again, we're right into that 4,160 area, which has held this market now for quite some time. It's quite a zone or a level that continues to hold any decline that the market has seen for the last week. So we had it here, we had it here, we had it here, we had it many times right there. And if that continues to be the case, well, then we're still looking for it to go up. So, but if it's going to prove its intent, breaking the 200 would be in order, breaking 4,160 would definitely be in order, and that's actually all the way down here. And then for it to start to proceed down to these other levels. And that's where I'm going to leave it right now. Our next update will be Monday, May 3rd.